Nothing said on Empire is a recommendation to buy or sell any investments or products.
Now we're
We are
ripping.
live, reporting live, ladies and gentlemen. We don't do any of these live streams. It's all very heavily edited. We're missing Yano today. Rob and I have things under control. Rob, what's going on, man?
Well, we're letting the inmates run the asylum this week, which is great. So I always love to see that happen. So just let's bear with us.
We have come a long way, my friend, since you were a guest, and now running the show. Lead left. You're left on my screen. You're lead left. So.
What's funny is that my face is still up a lot on the when they do the little clips, but I'm still not on the masthead. So
Get another week goes by.
Maybe it's just they needed somebody with like a kind of a good bone structure, like a little face to put up front there.
Are you talking about the jawline here?
The jawline.
Got it. Nice. All right, let's get straight to the jugular, I guess. We need to talk about Clarity. Coming off last week, seems like it was all-time high. There's a lot of optimism on the timeline. I think Brian Armstrong saw a couple of tweets. You're a Clarity guy, so what's going on there?
Yeah, I mean, I talked about this a couple of weeks ago when I was on in DC, and then also I think you guys had Greg, the GC of Multicoin, on last week, who on a good podcast. Listen, Polymarket is I think down to 27%, and so it's been kind of trending down for a while. There was this sort of spurt of optimism, to your point on the timeline, which I think is, listen, people want to get it done. And so they're excited about it. They're talking about it in public. They're showing a lot of just conviction and I think confidence, because they think that helps get it done. If you talk to people in private, I think the reality is there's a lot of bearishness on an expectation that gets done. There's, basically two open items. One is the ethics language, as we've talked about a bunch, which is just, what is the administration and the Trump family willing to do around carving out, some of their ownership in these crypto-related projects? How are we going to, litigate that in the future? Should there be, complaints? And who would have the power to bring those complaints? Would it be the FBI or the state AGs? And so that continues to be, I think, probably the major issue. There is one other issue, which is around essentially these developer protections, what they call BRCA, and how the federal law enforcement feels they are able to use different types of tooling to potentially catch or bring bad actors to justice. That piece is, I also think, quite fraught at the moment. Senator Cortez Masto, who's one of the leaders on the Democratic side who's been championing this, has had a perspective on that both the Republicans and the just the rest of the industry likely would not be okay with. At least she put out some language, he put out some language a couple of days ago that said, hey, this is a new agreed upon language with us and the and some of the people on the Republican side and some of the people in the industry, and that language was things that the industry and the Republicans would not have agreed with. And so those two topics right now feel like potentially tough to surmount at the moment. We're still trying to get something done. I think there might be a vote next week. That vote might be upon partisan lines, and then we end up in September. And the longer this goes on, the less likely it is that we get to an agreement. But I'm still hopeful. A lot of people are still working really hard, but we're in a tough spot.
This is not the Rob voice that I heard last week. Last week you were like, let's fucking go. And right now, I'm looking at Polymarket. As we know, we like Polymarket. We're not sponsored or anything, but Rob and I, like Polymarket, and it's at an all-time low. It's at an all-time low, 30%. It felt like we were almost there. It jumped all the way to 46% last week, and then just like semis, man, it's just traded down.
That's what's happening in your mind. You're like, what is happening to my semis book? What is happening to my memory book?
But listen, I'm just saying the market's up today. Sounds like we'll get into the market and stuff. Boy, anyways, we're not going to get there just yet, but market's up today. I thought I'd seen some volatility in crypto. And it's like the meme of crypto bros just pivoting to memory and just getting absolutely whipsawed.
Everything is trading like crypto now, but
that's the thing. here's the thing: if you were in crypto, you survived. Pivot to just trading all assets, and I think that's where the world is going. Like, just on a more serious note, like we're going to talk about Robinhood chain, we're going to talk about tokenized stocks, we're going to talk about, but it is truly crazy that just the new market structure, just you know, Robinhood reported earnings this week. We're going to talk about that. We're going to talk about their crypto numbers, which was a really interesting stat. We're going to talk about Robinhood chain, but yeah, just zooming out, like markets just in general. I mean, it's been pretty volatile. You have like semis, doing 10 up 20% today. I mean, that's just, if there's one takeaway in all this conversation, it's just don't use leverage, ladies and gentlemen. Charlie used
Oh
to say,
gosh.
what is it, ladies, liquor, and leverage. Just out of the three, definitely avoid leverage. It's just really hard. I know you guys don't use that much leverage or at all in your
No, we
fund,
don't. We don't
but
at all.
it's crazy. Should we talk about obviously the most important headline that was running around yesterday?
Yeah. So before we get into situational awareness, which I know you want to talk about, I want to make one last point on clarity before we move on, which is, you've seen it come out from both Chair Atkins and from Chair Seelig on the SEC and the CFTC side. They're ready to move forward on rulemaking and trying to put a package together to help the industry have clarity on how to move forward, even if there isn't actual legislation. That obviously creates a situation where that could be rolled back under different chairs. But I do think, regardless, the SEC and the CFTC are going to move forward with haste here, and they're going to try to bring something that is good for innovation onshore, is good for bringing back entrepreneurs, and is good for both the industry and finance and a lot of the companies who want to participate in the space as well. And so that's positive. And so not all hope is not lost if clarity doesn't become law.
Are you buying at this level in poly market? Not financial advice, but like gun to your head.
No, I wouldn't buy. I think it's appropriate price. I wouldn't buy the 30% on poly, but do I think that crypto will be in a better spot, regardless of whether it becomes law or not, in 6 months, 9 months with the leadership and the SEC and the CFTC? Absolutely.
Yeah, I mean, let's not forget, like we're in a point where like there's a conversation that's happening. Like 2 years ago, like 3 years ago, there was no conversation, and so just the fact that we're talking about it is positive in my opinion. Obviously, the bill in whatever form, I still think that there's obviously different stakeholders here that care about certain things more than others, but a bill passing, as it is or similar to close to where it is, would still be very much more positive than a bill not passing, and the signaling. And we talk about like on the margin, our enterprise is going to slow down, and is it going to be an issue? I mean, I think Genius is like a landmark bill, but clarity would just be so much. It's just net positive for the space. There's people that are always on the margin, want a
100%.
little bit more here and there, but as it is, if you were to pass it, like, I don't know if you would disagree with me here, but I think it would be, it would be much better for the industry if we got a bill passed. It just solidifies the legitimacy, and you have then you can like do amendments and whatnot, but it would be obviously much more detrimental if we didn't pass it.
100%. I hope it gets passed. We should continue to work to try to get passed. There's a lot of people working on it, but we're going to get rulemaking out of the CFTC and the FTC, the SEC and the CFTC regardless. And so, listen, we'll be in a better spot regardless. I applaud everybody who's working on it. Hopefully we get something done.
There you go. Where do we go next?
We got to talk about your boy.
But if we get in there, it's just we're opening a can of worms. I do think we have to.
How are you, by the way? Like, I feel like you're like a little bit of a mini Leopold here. So like you've been fashioning yourself. So like, are you surviving? Did Goldman did they liquidate you?
I got an email from Goldman today. It was not about that. It was about something else. No, not at all. I mean, look, coming out of last pod, I was like, look, I'm unbothered, moisturizing my lane. I've always felt these things are extremely volatile, and you just go look. Like, it is similar to crypto. I've always felt like it is very important to obviously underwrite a thesis, but factor in, okay, what's the volatility of these things, and just bake that into, and also have like a certain price in mind. I still think we're nowhere near the opportunity, like of capturing the opportunity in just AI and semis in general. Big week because you had Meta, you had Microsoft report earnings, and everyone's just looking at, and Google last week. Everyone, and you guys should go listen to the All In Pod. There's good discussions around Google's numbers. What the market's just really focused on is Capex. There's a great post by Satya Nadella around the ROI of AI and how he built it. It was kind of surreal to see someone like vibe code and just like create an artifact that he was sharing in earnings and then tweet it. Everyone's out on the timeline, right? And I think that Capex, Meta, Google, Microsoft have all maintained or increased their Capex guidance. So there's like, I think the market's responding well to that. And the longevity, I guess this applies to your portfolio, USDAI. You remember, like, there's always a wall of worry that you need to climb when it comes to like crypto, AI, just in general, right? In investing. In AI, we've heard like the usefulness of these GPUs, of these, like, if you're gonna invest all this money into building out hyperscalers, what's a useful life of that? And I think one of the interesting things that I saw yesterday, this is Satya's post, is like the ROI, like one, the usefulness life. I think it was Meta that said it actually. The useful life of these racks is much longer than what they anticipated, and I think what other people are anticipating. So that obviously bodes well to everyone that's behind, like, just deploying these. But yeah, it is more semis, ladies and gentlemen. If you haven't been paying attention, has been more volatile than crypto these days. Sort of like crypto's quite muted. Just
$1 trillion assets with like 100, 120 vol.
yeah,
It's like crazy.
totally. And so the last thing I'll say is I think the Korean market is extremely volatile. It has had more circuit breakers, and there's a circuit, for everyone that doesn't know. You have a circuit breaker in town. There's like a pretty big move in the market, up or down. I think there's been more circuit breakers this year than the entire history of the Korean stock market. So and I think that's relevant for crypto because you said earlier, like, crypto, I think, has like foreshadowed what is happening in every other market. It's not that like, you know, the entire market's coming to crypto, not crypto trying to mold into the other market. And I think that just means like, what I want to get your take is in your conversations, because you come from TradFi too. It's like, if you're at an institutional fund, like, I understand retail and Robinhood and 0-day options and that whole phenomenon, I think is like, if you've been paying attention to crypto, we all know true and well. But let's talk about institutions for a second. Like, it just also feels like institutions are becoming incredibly short-sighted, momentum driven. Like, if you're running a hedge fund today, is it like the most difficult time to run a hedge fund ever?
I have to tell you, listen, I'm not an active trader, although I've done a lot of investing in like, capital markets infrastructure. And this was bound to happen, obviously. And, the advent of AQR and then everything that we've had since then. And, just how much more quantitative, how much more ML is being used when people think about, what they're, the trading activity. And so that's why you see, the vast majority of trading activity today is, of course, like automated. And it's, ingesting a bunch of data, it's spitting out a bunch of data. And it strikes me that what has happened is we've just sort of lost the long-term buy and hold, like, fundamental investor, because people cannot stomach the volatility of what's been brought into the market by more leverage. I think Goldman said in the front half of 2026 that there was more leverage at their prime than they had seen since before the global financial crisis. And not only that, there was about 20% of that leverage was basically in just a few AI memory chip names, right? And so you have this bunching that's happening at the biggest names. You have leverage being put into the market in a way that we've seen in crypto. You have retail active trading getting to be a much bigger part of the market. And really, in many, often feels like the retail active traders are the marginal buy, right? You have much more of both the market makers and just generally a lot of the takers are doing a lot more quantitative, a lot of quantitative strategies instead of just, call it, buy and hold long term. And so you bring all that together, and the volatility in all asset classes is just exploding, and it's exploding in a way, and it's bunching in a way that does make it look very much like crypto has in the past. And so it does feel for me like it. I know it's not dying, but at least in the conversation and what people are focused on in our attention spans, the the long-term fundamental investor is struggling more than ever, and also because the LPs are struggling to take just to handle the volatility. I mean, this
Yeah.
is something crypto funds have heard for a long period of time,
Oh yeah,
which
yeah,
is it's like, oh well, we like the fact that tokens potentially give us earlier liquidity, but also like this is a venture book. It's not supposed to go up by 50% and down by 50% in a quarter. Like that makes no sense to me.
yeah.
And now you're seeing it in like across a bunch of different asset classes, and so people don't know how to stomach the volatility yet, and it's creating incentive structures that I think are quite perverse. And then we talk about Leopold, right? He supposedly sold his entire $14 billion of notional value in a single block trade because he was 4x levered, right? And going into and then when we've had memory stocks down 50% in 2 months, so like that, it's crazy.
In 2 months, in a month.
Yeah,
It's yeah. My current report earnings, then everything, the entire like everything's just down 50. Today's obviously a bright day there, but yeah, I wonder. Like I remember we never experienced it, I think, but I have heard from a couple of fund managers that a lot of LPs were like, just don't send me quarterly statements, please. It will make my life extremely difficult when I go to a committee and do like portfolio review. In a perfect world, just send me something in 4 years, 5 years, 10 years. Just I don't want to see the intraday vol. But it just tells you a lot about like how difficult it is to underwrite crypto and or like other
yep.
high vol asset classes. And yeah, I think people just are not set up traditionally to see this kind of vol. Goldman has some interesting stats where like the momentum index just worse than at or worse than 2008. Just to put it in perspective, like we've had a massive deleveraging. um, all the different banks are like obviously commenting. Like JP Morgan said, look, like 70 now 90% of all the like leverage in the system has been rinsed out. So a lot of this conversation we've had in crypto is like we look at
Just
perps, we
sounds
look at the
exactly like
funding. It
people tweeting
literally
about
sounds
crypto. Yeah.
exactly. So anyways, this is a word of encouragement. Like we've always said here, and I felt that like the lines between crypto and TradFi are increasingly blurring.
Oh, yeah.
If you're a trader out there, an investor that is in crypto, you've had to sort of be a venture capitalist and a high frequency trader and simultaneously. But I do think the world is just becoming more like that. Kenny Griffin said something interesting. He said like who has probably like was way ahead of his time of just being super focused on short term and tight risk books and pods. Now he's saying the opposite. He's like he's more interested in long term fundamental investing, and he's always, in my opinion, been ahead of the curve. And for someone like him to say that, it just I think tells you a lot of what the opportunities, which is just like again, don't necessarily use that much leverage or any at all. Expect a lot of vol. If you want to get creative or crafty,
Hodl.
just figure out.
You got to hodl.
Yeah,
Hodl your
but figure
micro.
out or figure out a way to like make money on vol. And
Yeah,
that's
well,
what I think a lot about. But you know, it is crazy. I mean, you have Meta like down like today like 9-10%.
I mean, the best performing liquid funds in crypto, if you take over you take like the whole last 5 years, are all delta neutral funds, all of them.
Delta neutral.
And yeah, and because of the volatility, and all of those guys are now delta neutral, in traditional markets.
It's funny you mentioned that. I was having lunch with these guys that started in London, and I think managed I heard close to 4 billion, and they're all market neutral. I was like, whoa, I've never heard of these.
Oh, this
guys.
is QRT.
No.
Okay.
And I think the guy used to work at a JP Morgan to Goldman prop trading, and started doing crypto, and then just slowly like totally ditched TradFi strategies and just is focused on arbitrage opportunities, market neutral, and crypto. They did say, in fairness, like this year has been a bit more tough than prior years, like 2022, 2023, 2024 has been much better. This year has been a bit more difficult. But I was just blown away. I mean, they're at Parify, they do have like we used to have or still have like when I was there, like a stablecoin arbitrage fund. Like there were marginal deviations between DAI and USDC, and Curve was coming around, and there was. But I asked them like, how scalable is this strat? Before knowing AUM, they're like, no, we have like 4 billion. I was like, wow. And not
that's surprising.
Again, like it just tells you the crypto. To your point, like market makers, just ARB funds. I mean, Goldman I think has a pretty big strat. right? A couple of the trad players. Citadel's probably doing a lot. Jump's doing a lot here. It feels like, to your point, market neutral funds and lawyers are the best performing people in crypto. Everyone else is struggling.
I will say it may be worth noting here on this like AI versus like crypto LP. I'm on the West Coast this week, and we've had a bunch of LP meetings this week. And one of the things that I've started to hear, probably for the first time, is a little bit of AI fatigue from the LPs. You know, big institutional endowments, fund of funds, and 3 months ago, 4 months ago, there was still just insatiable appetite to get exposure to these AI funds or the generalist funds who are doing a lot of AI and are very good. And it started. I mean, it's unsurprising, I guess, that also what's happening in the public market is going to affect that. But we're starting to hear a little bit of like, oh, maybe this got ahead of itself. There was way too much deployment in the first half of the year and in late last year. I heard one LP who is not that exposed to crypto at all, is only in a couple of managers, compare it to the 2021 crypto cycle. And just say simply that, like, listen, like valuations are way too high. A lot of these companies are just, software companies that are, changed to business model. It's not SaaS anymore, but it's still just software. And, it shouldn't be, there's no reason it deserves a, 100x multiple. I mean, by the way, the open router Stripe thing that, when it's $140-150 million revenue business, it is insane to me. But that's
is that confirmed 10 billion?
That was just the rumor. So
The
I don't know
rumor,
what
right,
the
yeah.
the
I
actual
haven't
deal
seen
is.
more on that. Yeah.
And I don't know if they would use
But
equity or cash. But
yeah, it's interesting because you might have heard me say in the pod like earlier this year or late last year. Like I feel like there's exactly what you said. I do think that there's more nuance into the discussion around like AI is just bucketed like crypto was back in the day. Like crypto is a massive bucket, but you can make like there's names that are very undervalued, underpriced, and there's stuff that is extremely overvalued. And I think AI is in that camp too. Like you can slice it into hyperscalers, new clouds. You have memory names, you have testing and burning and testing. Like there's many different parts of the stack, and everyone's trying to figure out what the bottleneck is. But Gavin Baker, I think, worth a follow. I think he has some of the best takes. Which he said it was like there's pockets of AI that are extremely overvalued, hard to justify valuations, especially also in the private markets. Like you have these.
yep.
I get that like researchers are now like rock stars and getting paid $1 billion to join like Meta and stuff. But if you're just as a traditional venture fund, like I struggle with like, why are you investing in it? Like you see these rounds that you close at 3 billion and then it jumped to 8 and then now it's 16. And then there's like, what has changed in those 3 months other than you missing out on investing in the first round? We saw that a lot in crypto, right? And so that to me feels very hot, and I have my own opinions on like who's going to accrue value. I think you mentioned that it was rumored that Leopold, who has a position in Anthropic, had sold a lot of that. There's a big discussion on open source models that I think
But
I don't know.
also sounds like crypto. Like that's
Which
also
also
a crypto
sounds like
conversation.
crypto. Like where does value accrue, right? We're going to talk about Robinhood chain and Ethereum yet again. Ladies and gentlemen, we can't escape that. But I do wonder, like, money. I think the AI trade is still very much intact. I think there's probably more rotation within AI and where you put your money behind. Like I'm not sure Anthropic at $1 billion is, even though I've heard like the ARR just keeps crushing. I think I see way more risk in like open source models eating into that business and Harvey. Like if open source models are progressing quite a bit, it does wonder like, are you still going to be able to like get that much profit margin on your on token spend? Like I don't know. But yeah, all of this is starting to rhyme with crypto.
We have a portfolio company that's still in stealth. I think it's going to come out of stealth next week. Who has a router product that is similar. Open Router is probably the only other competitor to it, but it has much better benchmarking in terms of actually optimizing spend, and if you want to go and optimize your token spend, and they are one of the things that they've started to see is they kind of serve a lot of agentic businesses, people who are building agents to, either run their business fully or both for internal use cases, potentially also consumer or direct to, end customer use cases. And you've seen, I think Coinbase came out and talked in public about how they actually built an internal router for their own context, which is around that helps them optimize cost. You saw Ramp come out and launch a product. It's sort of an odd kind of like more closed loop product, but trying to do a little bit of the same thing. And it's very clear to me that now with the how much better the cheaper open source models are getting, and also how the vast majority of workflows don't actually require the whatever the frontier model is, that token spend is going to start to become a much bigger topic of conversation, and that the being able to charge people for the most frontier models is a real premium. That's probably going away in the vast majority of industries within the next 12 to 18 months.
Robots and machines will outnumber humans on-chain, and peaq is how they get there. peaqOS enables any machine to do business on any chain. It turns machines into autonomous actors and liquid assets with ease, giving robots access to capital and the ability to compound their value. That means funds, allocators, and institutions can underwrite, finance, trade, and route capital to machines the same way they handle any other asset. Millions of new potential consumers for any Web3 service, from compute to storage to anything a machine may need, without a human in the loop. Head to peaq.xyz or click the link in the show notes to find out more.
Reminds me of NFT craze, right? You're paying like $1,000 to settle a transaction. Yeah, TBD. I mean, obviously, a lot is moving quite quickly. But for when you guys did that investment in the router company, I'm curious if you're able to share like how much growth is that company seeing? Like, how much demand is it? Because we hear some companies that are really focused on token spend and capping that and making sure that the productivity is there, and others that are just like token max. Is and then what's the defensibility of a routing product like that?
Yeah, I probably should get too deep into it. It's one of their products in a suite of products, which should
Yeah.
provide more of a moat because they do a bunch of stuff around just enabling agentic businesses generally, including payments, which is where some of the crypto angle comes in. But the growth has been a lot. It's much earlier stage than Open Router, so the growth has been a lot in the last few months. But they've got some initial pieces of data, which is that for one of their clients who runs a ton of spend, they've reduced costs by 80%. So
Wow.
like that is an incredible number. It's only one benchmark right now, and so it's not. Say that for some of these other people, you're seeing benchmarks not nearly as drastic as that, but it's clear to me like that's where the market's going, and that both Anthropic and OpenAI are going to have to figure out net new business models. But the capex spend that goes into training and goes into all of the work that you need to go and launch one of these frontier models, it is really incredible. And so, like, how does the economics work? I think that's the question everybody's asking themselves still. But from an
Yeah.
Anthropic standpoint, like to your point, when that goes public, I don't know anybody who thinks that goes public for less than 1.2 trillion. So
Hmm.
it's
Yeah.
there's still a ton of demand there.
Yeah. Yeah. It just feels the most exposed in this shaking, like in this world where like there's increased scrutiny for token spending, and at that valuation, I'd rather own other stuff in like long AI, but I'd rather own other stuff. And I'm not coping. I clearly I could 200 billion, maybe 100 billion, but like obviously the ARR number keeps growing. So as long as that continues to happen, I don't think it's like crazily valued to your point of like one. We might be in a world where ARR for them is like what 150 billion.
Yeah, I think there were some numbers
Yeah.
that said they were close to like as of July,
75-ish?
like yeah, like over like close to 150. I think I saw a tweet
Wow.
about it. So
Yeah,
that's
crazy.
So, but
Yeah.
like, I mean, we'll see, right? It's I don't
It
know.
must be, and I think this is to put it in perspective, fastest growing ARR in the history of mankind.
Oh yeah, it's
Absolutely,
incredible.
like
Yeah.
by a country, like by it's just incredible.
Yeah, I
Um,
mean,
yeah,
we the fastest growing companies we used to see are companies that might grow 8, 9 times in a year, and they would do that for 1 year, and it would slow down. And you know, companies like Ramp and Rain Event and stuff like that. Like we've seen tremendous amounts of growth in these companies where they've put big multiples of their business in a short period of time. But like what we're seeing on the AI side from the foundational labs is so far and away unlike anything that anybody's ever seen, which is part of the reason you get this mania and also part of the reason that you might have a very big correction. But that doesn't
yeah,
mean that the long trade, if you have the right long-term viewpoint, isn't the right one. It's just you have to stomach the volatility in between.
yeah, yeah. All right, so should we pivot just a brief second on Robinhood chain? I think obviously we discussed
Is
about last
Robinhood
week.
your biggest holding? Is that your single biggest holding?
Not at all, not at all. I have some exposure, but no, no, no. I
No?
used to
Okay.
own it quite a bit. Now it's definitely not that. You guess what it is. It's AI related. It's not Robinhood. Um, but I think there's so to put it in perspective, they launched a couple weeks ago. A ton of activity there. There was a tweet by Frank, and I'll just kind of go through it. Like less than a month after launch, Robinhood chain has become the largest network by tokenized stockholders, surpassing Solana, BNB, Ethereum, and Base. Distribution matters. I think there was some nuance to that, which is like the way you count users is tricky. Like, and we've gotten into this like discussion around in crypto. Like, a wallet is not necessarily a user can have multiple wallets, and how you count them is different. Um, but
And
still
also, by
pretty
the way,
impressive.
the active accounts have actually trended down after that initial bump, so they've been down the last week or
Mhm.
two.
Yeah, but no, pretty impressive. I gotta say, it's I don't know if you have any particular take on that. Just found pretty interesting to see that a lot of the attention is there now.
Yeah, listen, I think very clearly, number one, just like the Robinhood wallet product is good. Like anybody who hasn't used the Robinhood wallet product, it's different than Robinhood itself. It's a good product. It's obviously like they do a very good job of building consumer product. Things that are easy to use that people like to use. They've done, I think, a really good job on distribution, a really good job on marketing, and also bringing in instead of like building their own like closed loop, like net new protocols, they brought in Lighter and Morpho and Athena and these guys to Uniswap to come in and be kind of the cornerstone, but still distribute it the same way that they've distributed their other products. Obviously, the smart move. It's been it's been really really fun to see. I I expect we'll see after this initial wave of excitement a little bit of a trough, and then we'll have to see what happens over time. I'd love to see them be able to bring the Robinhood wallet product together with the Robinhood core app in the same way that Coinbase eventually did that. That would be, I think, a humongous unlock for for the chain. I think it's very clear that they see this in the same way Stripe and some others have embraced crypto, that as a core growth engine for them in the future. And so I'm excited to see what continues to happen. I do think people get a little bit too excited, probably a little bit too quickly on like the initial, thing. Like there was a bunch of people trying to front run like the meme coins, but like the same thing has happened
Hmm.
on other chains. That's
Yeah,
all fine and dandy. But once this thing kind of settles in, then we have to see how growth goes over
yeah.
time. Same thing happened to Base, by the way.
Yeah. Yeah, yeah. Look, we're gonna talk about like publicly traded companies that have a crypto business, not just Circle, Coinbase, Security. Like really, like Robinhood, in my opinion, is the most forward-leaning traditional company that is moving into in a very like across prediction markets, their own chain. So I'll just like spend a minute. Their earnings, just for like they recorded like 1.3 billion in earnings, growing like 32% year over year, so pretty strong. Um, they beat like consensus estimates and whatnot. I think the average trading per account, like the intent has come down quite a bit. Maybe it's
Yep.
summer, some cyclicality to that. Prediction markets did 156 million
Bigger than
in
crypto now.
volume. Yeah,
No,
exactly. Because crypto did 100 million. And so that volume, starting from a low base, is at 10x year over year, like
the 156
13.6.
is revenue, correct?
Revenue, yes,
Yeah.
not volume, obviously.
Yeah,
Revenue, that's 10x.
that's I think that is to be expected with the World Cup. I'll be interested to see what that is in like July and
Yeah,
August. So
fair point. Yeah, World Cup was the biggest contributor there, I think.
yeah.
Again, interesting. We've talked about this before. Robinhood drove, I think, over half of Kalshi's volume. Then they bought
No, they
MIXDX.
did essentially so they bought NIX or the old LedgerX business
IX,
out of
yeah,
and they and then they did a JV with Susquehanna to launch a thing called
right.
Rothera. Rothera is their prediction market exchange, but they've started to move some of their Kalshi volume to Rothera.
Away.
Expect
Right.
expectation is they'll continue to do that over time. I'm sure they'll still do best pricing, but that you'd expect more and more over time that they want to own that full stack.
Yeah, exactly. Not to get too much, but I feel like that's pretty indicative of like how traditional firms are going to start implementing stuff that is working in crypto. Like if you have distribution, you launch your own chain, you launch your own prediction markets, and you route away from a Kalshi or Polymarket. In fairness,
I don't know if you saw this, but so the CME right now is suing the CFTC on perps. Then they came out in their earnings call, and they were like somewhat actually positive on perps, which like very clearly tells you they're like talking out of both sides of their mouth because they're doing something as well. And then they've been very upset with the prediction markets exchanges. They came out and said yesterday that the CME is probably going to launch sports linked prediction market contracts or options contracts. And so like all of the incumbents, it just tells you like you try to get in front of the innovation. When you can't get in front of it, when you can't stop it, you embrace it. That's what we're going to see from everybody.
yeah. But look, it's interesting. Obviously, like Robinhood, just another point on like it's been now 4 weeks, 12 billion in DEX volume, 100 million transactions. The RWA holder count, like 328K, like maybe let's just run with that number. Obviously, we might revise that. But they're like number one chain by RWA holders. That's Frank's tweet. Some people might contest that, but it's still impressive in the sense that like, they've sort of leapfrogged every other crypto native operation out there and with their distribution, which to our earlier point, like the Robinhood user is the prime user for prediction markets and just on-chain activity, right? My view is Robinhood is probably the most important company to track because it will tell you if flows are coming into crypto, the sentiment that like if it's true that like there's AI fatigue, people want to now trade crypto or NFTs or what have you. You're likely going to see it first. Robinhood, not Robinhood earnings, Robinhood chain and the activity there, right? And I think that was like before it would have been like BNB chain, which I think we haven't talked or don't talk about too much.
I mean, BNB still has this like Binance is still one of the biggest fintechs in the world in a lot of localities.
Yeah. So anyways, pretty interesting to see that. I don't think tokenized stocks. I think so. They just one last point there. They launched tokenized stocks, obviously not available to U.S. customers. So everyone else ex-U.S. can get exposure to tokenized stocks in the Robinhood chain. Right. So that's also a metric that I'm really closely following because it is the true expression of what Hyperliquid has done as well, like with HIP3 and stuff like that. Solana has done it too. So I'm quite curious to see how much activity, and we've talked about at length here, of like just tokenized stocks. That's Robinhood. Similarly, there's another great tweet. Because Jason's not here, we're going to reference the block. The total, so obviously Robinhood chain is built on Arbitrum, which is an L2, so it's in the Ethereum ecosystem, but that's a bright light, low light in every other L2 out there. I think the total value, the TVL in all other Ethereum L2s is back to roughly 5 billion. The last time we saw that was 2023. So pretty big reversal. I think all the other L2s find themselves in a, difficult spot, to say the least.
What do you make of that?
I don't know. I would like to see if there's been an actual rotation away from these, and like those maps that have the flow. I don't have it in front of me, but not surprising. I mean, I think we're in a point where like there's nothing really truly exciting happening. Like you have the Ant symbol coin in Solana. That was like the only thing that just gave a little bit of life. But there's not this chart talks like optimistic rollups, secret rollups, Validium, plasma, and state channels. There's just not, it's not interesting for a retail user. Like they'd rather be, you have days where there's like 10 plus, like there's super high vol in traditional markets. Korea has always been, the penetration of crypto in Korea has always been very high. I think it's the highest in the world. Those guys are not trading crypto right now. They're trading other stuff.
Yeah,
And
I will
so,
say the blocks numbers are a little bit odd because I think it's L2 Beat who also said that the like combined TVL for everything in the ecosystem and the Ethereum ecosystem, not including like there was like some they took out some team controlled tokens that like they didn't think were like particularly real on Arbitrum, but
right.
they still say that it's they put out a number that it
Yeah.
was like 33 billion this week
Yeah.
as well.
Yeah.
And so there, I don't know if you've spent any time thinking through like how the block, or if you looked into how the block is coming up with that methodology, but it is lower than other sources are coming out with.
Yeah. I will say the trend is all, if you look at DeFi Llama, like Blockworks, like the trend is in one direction. I think the other thing that we've talked about a lot that I want to talk about on the spot, like it's been pretty brutal this year in terms of hacks. And, you had Kelp, you had a number of others. I think there's increased awareness of like, look, it's increased hacks this year. So the first half of this year, I think, is the highest in crypto history. Like 212 exploits. It's been over 1 billion of funds lost. That's 3.5 times more than last year. North Korea Lazarus is like half of that or more than half of that. Kelp and Drift were the biggest, right? And a lot of this has been social engineering. I don't want to say like smart contracts all of a sudden just became more vulnerable and Fable and all that. I think it was just a lot of these are social engineering attacks and bad like risk management policies. But nonetheless, I think when you combine like low yields on chain, increased hacks, plus AI becoming like the momentum trade, I'm not surprised. Like I think those three things just really explain less TVL. Like the basis trade is not as interesting anymore, right? Like the rates, like what's Athena now? Like, it used to be like 10 plus, now it's like 3, 4. It's just not enticing.
It's over 4 now, but they're doing obviously they're doing a lot of RWA stuff now. I mean, it's still well above SOFR, but it is hard when I think Robinhood chain right now is on USDG to giving you 7%. Well, clearly they're just subsidizing.
X money is giving you 6, like
6%.
Yeah. Are you guys? I know your partner Haseeb's talked a lot about like on chain, like hacks, and he's pretty good at like diagnosing that and posting about it. Like internally as a firm, is this like a major concern for you guys when you think about the viability of crypto and deploying stuff and advising founders, or is this just like, look, guys, just really have good OPSEC and you'll be okay?
Sorry, I'm gonna make one last point on the TVL stuff before we go into this. But I think on the TVL stuff too, like we have one portfolio company that that kind of does it runs a lot of these vaults for a lot of the institutions, and we had the board meeting a couple of weeks ago, and TVL for sort of the whole industry was down, or a lot of the vault products was down on the quarter. But it does seem that when people talk about TVL numbers, about half of that number is actually just like ETH coming down and Bitcoin coming down, because a lot of these TVL is like
this price action.
It's denominated, and so I think it's worth keeping that in mind when you talk about these numbers. But okay, so that's the last point I'm making on that. On the point about security, listen.
Wait. Before we go there, have you guys looked at? To me, the most important metric is active users on chain. I think A16Z came out with a report last year that you might have also heard me say quite a bit. It's like roughly, they kind of slice it in their own way, but they're like less than 100 million active users on chain. They give a range of like anything between 40 and 60. I think that is worth like just keeping tabs on, if it's A16Z or whoever. But to me, that feels like the most important metric. TVL, to your point, can be just like price action related, but users, in my opinion, is like the most important metric, because I don't think we've onboarded, and I probably lost quite a bit of active users.
Yeah, well, and I think the TVL and the users, like a lot of this is related also to the question you asked about security. So we actually saw that the vault products, they struggled a lot after April and after the Kelpac because there was, and then there was a few, there's Stream Finance, there was a few others,
Drift.
and people were and Drift and people, and then there was Ostium recently on the OOP side, and so people have started, I think, to be weighing the risk reward of being on chain a little bit differently. At the same time, I do expect that active users should pick up with the usage of and the proliferation of a lot of tokenized assets that are being distributed by people like Robinhood or other neobanks, where they don't they're abstracting away the being on chain part. And so you have these two countervailing forces, which is that a lot of the very crypto native activity is like maybe coming down, where the more retail oriented users through traditional distribution modes are starting to grow. And so that's what it'll be interesting to see how those interact.
Yeah, I do think applications benefit more than the Arbitrum Ethereums, like the infrastructure providers. I think applications like Uniswap and others benefit much more. Athena and some of the others, right? Just shifting gears a little bit, what do you make of Ondo and them launching? I don't know that much about it, but I did see that they launched as like private chain. So we're back to, I'm curious if you guys have looked into that and what your thoughts are around their design choice of that to do that versus being public.
I haven't looked that closely at it, but they announced, okay, we're going to do sort of an institutional L1, and it's going to be, I think, sort of. They're saying it's going to be private. A lot of the language sounds a lot like Canton, right? Which is that it's like basically we want to compete with Canton.
And like, so Canton's working really well. We're going to ditch our effort that we announced earlier this year, and we're going to be full on institutional. We're private.
Yeah, so it's like, it's going to be verifiable like a blockchain, but it's going to be private, and it's going to be, but also non-custodial. But you won't necessarily be able to run an independent validator, and like they didn't give a ton of details about it yet, and so we'll see what it actually ends up looking like. But I think what's very clear is that for these the Ondos of the world, the Cantons of the world, that are focused on how do we serve the needs of larger institutions who are trying to use tokenized assets, also, by the way, who are potentially worried about lack of privacy, but not open source hack risk as well, and they want to be able to control maybe also the regulatory risk that sits specifically on their chains. There is a much bigger conversation today around how do we serve those people appropriately. I have a perspective that this is a little bit like, I don't know if you remember a decade ago, but we had like the hyper ledgers and the enterprise Ethereum and everything. This feels a lot like that conversation then, which is like, people think that completely enterprise private doesn't really work, but maybe something that's like hybrid will work, and maybe that'll just someday in the future end up being actually public and permissionless. But it sort of feels like you just need to pull these institutions along. I don't actually think a lot of this infrastructure that's being talked about right now, which is like sort of just a database, but a database that looks like a blockchain, but doesn't have a lot of the capabilities or maybe the ways of which blockchains are actually useful, which is like coordinating trust against a bunch of different counterparties. And but I don't know. We'll see what happens.
Yeah, in fairness, look, it always goes back to like execution, verification, and settlement. Like those are the kind of the three functions of a blockchain. In fairness, I think if we had the Ondo team here, and if they want to come on, we're happy to have them on. Is like we're keeping the settlement public, but like the execution and maybe the verification, but the execution itself is private, because that's what institutions want. You can't have order flow being public, and it's a fair argument. Like I think that was their whole like messaging, which is like it's still public to verify, I believe, but the execution itself is very much private, and that's what institutions want. So we got to listen to that, and we're going to build that in this direction. It'd be interesting to see like a discussion between like Canton, like Yuval and Ondo, and maybe like Mike Cagney or someone figure talk about like what they're doing, and maybe secure. I don't know. I think that would be like.
I mean, obviously the figure side, like they've tried to make Provenance like completely open, and commercials, right? And they just haven't been able to get other people to build there. So it is. Listen, I think there's a lot. What's very clear is the direction of travel is tokenized assets. Everything's going to be tokenized. People are coming on chain in one way or another. But whether that is Ethereum or Base or Avalanche or Monad or Solana, or it's Canton and a private Ondo, or nobody knows, right? And there's a lot of competing conversations happening right now. And there's also a lot of differences of opinions at the organizations themselves. And so there is an ideological fight happening here about what serves my needs versus also what do I think will serve my needs in the future in a different regulatory environment.
TBD, it goes above my pay grade. It sounds like a lot like a dark pool with some sort of blockchain settlement, but it's like, they'll believe this architecture, secure enclave, yada, yada, yada. And like, these are trusted, execution engines, but it's like a dark pool. But I don't know. I don't know that
TEs
much
I mean, there's a lot of work being done around TEs right now. But I mean, this is not new, but I think there's more excitement around them than there's been in a while.
Yeah. In contrast, I think so. Like, you hear Ondo talk about institutions want, like, the ability to their order, like the order book not be public and exposed, and then you have just Robinhood say, yeah, we're gonna launch a fully public permission, public chain, and like free for all kind of thing. Which, it's a different customer base. I will say, one's more retail, the other one's more institutional focused.
Yeah, I mean, you're definitely seeing more willingness to take risk among the people who are direct to consumer than the people who serve institutions. The institutions who also serve institutions, but also like, it's very clear. Like Robinhood has innovated in a way that has hurt the Schwabs of the world and has hurt the traditional wirehouses, and so like, doesn't say they're not right about what the world will actually look like in the future.
Yeah. And by the way, there's a world where both, are equally are successful. Like Robinhood clearly is monetizing distribution, and retail and activity there, and they've done that with Citadel, with Flow and stuff like that. Now they're doing with their own chain, and Ondo is totally different animal with institutions. So interesting. What else is there on the agenda?
I mean, probably maybe just end. I don't think there's much else, so that's probably most of what's happened this week. I think the AI conversation has been just dominating, both from like the open weight conversation and now what's going on with situational awareness. But maybe the last thing that interests me that I saw was the Visa announced their stablecoin platform, which was essentially just a way for them to say we're going to do value added services so that for institutions who want to use stablecoins as part of a wallet stack that we own, as part of potentially doing direct settlement with us in stablecoins for your card product, potentially doing maybe non-card, non-network stablecoin transfers as well. And we've just sort of seen this growth in what I would call the forward deployed model in stablecoins in a way that you've seen it in AI work really well. We have a portfolio company called Volatility who's doing quite a bit of this on the institutional side. And I do think that now we're a year from past from Genius, and we're starting to see every institution say, hey, like, I think this is interesting. I need a strategy. And that's been happening over the last year. But they're still a little bit unsure of how to go and put the pieces together. Visa is understanding that. And so this forward deployed model, I do think actually causes another, sort of wave of adoption or a quickening of growth in that market. And so I'm interested to see what that happens. Visa obviously has been very forward thinking on stable coins for a long period of time. And so that was an exciting thing for me.
Yeah, definitely. There's obviously one last tidbit here, not that on negative news, but I think it was also the record quarter of like the lowest amount of VC activity, new deals in crypto.
Although the amount of money put to work was still holding up well. It's just the later stage deals have
are getting more attention, and also from just more fintech focused funds, but especially on the earlier side, pretty tough. I even also have had conversations with companies that have raised Series A and raising the B without much try. It's really, really tough out there. And I think that's just not just in crypto. Like if you're not in the AI train, it's really tough. Like let's not forget just software in general, like and other types of businesses are really, really tough. I think the only thing that's really getting funded in a very meaningful way and sucking the air out is, like defense, robotics, and AI related. Like anything like frontier model, anything like etch, like chip design, stuff like that, like massive, massive rounds, and everything else I just feel like has been very tough to fundraise against.
Listen, VC is it is a hurting culture. Like people are just all chasing the same things all the time, which is
Yeah.
it's always refreshing when I see. I did talk to 1 or 2 LPs this week who are like, now is actually the right time to invest in crypto, and I was like speaking to the choir here,
Yeah.
and so I think we are coming back a little bit, and so I
Rob, be
expect.
honest. How many of those things have you heard?
I heard
It's
it
like
from I heard it from a
one
very big.
LPs.
I've heard it from a couple
Yeah.
very big allocators this week. So
Fair enough.
now,
Fair
now
enough.
the question is like, to be very honest, the people I'm talking to are like the champions, the crypto champions, right,
Yeah.
at the firm. And so when they go back to their IC, what is their IC going to say? That's still up for
Yeah.
debate.
It would be quite alarming if, like, I understand new money not coming in, but as like if you're raising another fund and existing investors don't at least put in however much you distributed, that is that is the cause of concern. I don't have intel on that, but
I mean, the
that
biggest
would
thing that gets asked every time is, what is your existings doing? And if you have
yeah.
less than 85% from your existings, like it's a conversation every
Correct.
time.
Correct. And for people, like if 85% of your investors are not doubling again, or just putting in money into
Putting
your
in
next
at
fund,
least the same amount of money as the
that
next fund. Yeah.
that at least the same dollar amount. Do they really focus on the
Yeah.
dollar amount, or do they just care about, like, are they in the fund?
They focus more on if they're in the fund. It doesn't have to
Yeah.
be the
Okay.
same dollar amount, but if
Yeah.
the existings are saying, "Hey, I want to support, but I'm coming down," then usually that means you have to bring the fund size down.
Right. Interesting. Do you feel that we've seen Hans of the world paradigms a bit in its own
I mean, they just did a
island?
nuclear
'Cause
deal this week.
yeah, no, they're just frontier tech as I think of it, just like anything frontier. Robotics, AI, small modular reactors, all this stuff. Um, but are is the idea that, like, crypto just the investable universe to create venture like returns, like you just need to bring your fund size down until we see
I,
just major wins?
I think if you're going to do crypto only, but it depends on how you define that, right? And so, like, if you define that as fintech, and a lot of these like fintechs that are using stablecoins, you can still deploy, 500, 650 million dollar fund like ours. I think if you're going to do a billion, $2 billion fund, it's really hard to be like very deep crypto only right now. And Dreessen is obviously trying to do it with their $2.2 billion fund. They
Is that
historically also
raised?
just, yeah, they already raised it,
They already raised
and
them.
yeah, but they also do a lot of liquid in that fund, so they buy and hold Bitcoin and ETH and Solana and all these things. Whereas in like most of the smaller VC funds, they either are like more explicitly one or the other. Um, I think, listen, I think fund sizes, we've seen it for almost everyone, came down. So it came down for a little bit for
Mhm.
Paradigm. It came down for Indreessen. It came down a little bit for Han. I think it came down for Framework. It came down for
S- s-
Variant.
s- Still big for Han. I mean, Han is just continues to a fund that I
Kate is an
don't see as
incredible
a
fundraiser. And then
yeah, yeah.
obviously they were one of the first checks or one of the biggest shareholders in Erebor, which has been an incredible return for them.
Incredible return. Yeah, that's right. That's right. Good stuff. Um, shall we go content of the week?
Let's do it.
Nice. What do you got?
So I've been watching the show Lucky on Apple TV, which is like Anya Taylor-Joy, and I didn't know anything about it, and I me, I spend a lot of time. Like the one thing outside of investing that I like is film, but not as much TV. And so I just saw this one day. I was like scrolling past and I started watching it, and it's sort of just like an interesting like caper like mobster show, where she's like running from the police because she stole some money. But I've actually been enjoying it in my week of travel, so I'm going with that.
Nice. I got to one, the Nadal documentary on Netflix. I just have I love anything related to sports. Really well done. I actually had no idea. I love watching tennis. I'm a terrible tennis player, but I had no idea that he had a foot um, deformity issue since very early on, and they had to. He was always like working with that and struggling with that, and yeah, pretty amazing, like mind over body kind of thing, and really interesting. It's a couple of episodes, well worth the watch, in my opinion, if you like tennis, where you just like the mentality of like the relationship he had with his coach, which was his uncle. Remind me a lot of the movie Whiplash. I don't know. Have you seen the
Oh, that
documentary?
movie.
Yeah,
I've seen the
Whiplash is
documentary.
like Whiplash is like I love that movie. It's like takes two to tango, right? It's just not the professor. It's like the student clearly like wants to get pushed, and I think you see that very much in the Nadal documentary. So I really enjoyed that. The other one is I read Sam Walton's autobiography. Really good. Just like obviously Walmart's like phenomenal company and what they've done, and really interesting to see that just evolution and how he thought about building it and stuff. So yeah, continuing on the autobiography train. I really enjoyed that one.
Cool.
All right, July 30th. We'll be in August next time we record. Are you taking some time off? Are you going to be here, or am I going to have to run this solo?
I took some time off a couple of weeks ago. I'll be around for August, so I'm
okay.
You know me. I'm like I get so much joy out of working. So
truly, yeah. No one ever retires. That's awesome. Okay, well, thanks everyone for listening. Have a great weekend. We'll see you in August. It's crazy.
Nothing said on Empire is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed.